Hey everybody, Economic Ninja here. I hope you're doing great. We're going to talk about real estate today, and with that being said, I know there's a lot of people that email me and they are super excited to get into real estate, and some people literally just cannot wait until this crash fully manifests itself. And I told you this is a slow process, but they've asked me to put a lesson in the course that I did, the how to start a side hustle. They want to know how to start a side hustle in real estate, and so I'm going to make a special lesson for that, and it'll be out in about a week and a half. And then at that point, actually, I'm going to download, I've got about another 5 or 6 lessons to put on there, and then we'll be raising the price up. So that introductory price will be over. So if you want that, I'll put it in the link below now. But yeah, I will put a special lesson on how to get into real estate right now. If it was me, I am not doing it. I am waiting for the big deals. I don't care about buying 1 or 2 or 4 homes. I care about 100 homes, and I'm not joking. I promised Mrs. Ninja. She didn't like the promise. I will be buying 100 homes when this thing comes down, because it's so easy. If you could buy 1, 2, or 3, you can buy 100. I know it sounds crazy. Let that car pass. All right, so here we go. This is out of Yahoo. I'm gonna link it below. And it's entitled, Robert Shiller Predicted the 2008 Housing Bubble. Here's his 2022 call. This is very, very important. It's good to go with people like Michael Burry, Robert Shiller, people that were correct when others were not, when others told them, no, this time it's different. And trust me, I heard that in 2006. I just heard it yesterday, and I'm gonna explain. This is a very successful businessman, actually, told me this yesterday, and I believe he's dead wrong, and I'm gonna explain that at the end. So if you wanna hear that, stick to it, or stick with it. Robert Shiller released a book in 2000 titled Irrational Exuberance. A little side note, if you hadn't heard that term before, we've heard that multiple times before, one being very important, and that was, gosh, now here, see, you go with no notes and you forget things. It wasn't Ben Bernanke, it was the guy right before Ben Bernanke, the Federal Reserve Chairman. Oh my gosh, put it in the comments section if you guys remember. But anyway, he was before Congress, and he said that he believed we were witnessing irrational exuberance in the stock market during the dot-com rise. Let's see if I remember it later on in the video. Which he proclaimed the stock market was a bubble, so both of them agreed. Soon afterward, the tech bubble burst. Then in 2004, the Yale economics professor called attention to spiking real estate prices with a paper titled, Is There a Bubble in the Housing Market? By 2007, Shiller predicted its bust was inevitable. Soon afterwards, of course, the 2008 housing bubble burst. As the pandemic housing boom, which has pushed up U.S. home prices by 42% over the past 2 years, fizzles out, it raises the question, does Shiller think we're in another housing bubble? So Shiller went on to spoke with Yahoo Finance, and he told the outlet that he said, once again, he thinks a housing bubble is headed for trouble. Home prices haven't fallen since 2007 to 2009 recession. Right now, things look almost as bad, Shiller said. Existing home sales are down, permits are down, a lot of signs that we'll see something. It may not be catastrophic, but it's time to consider that. Now, I'm gonna stop right there and explain something. 42% rise in real estate prices is absolutely insane. We have never, in the last 100 years, seen on a large scale nationwide home prices rise this much in that short of time, ever. So to sit there and say this time is different, oh heck yeah it is. If you don't think that we're gonna see a massive correction from something like that, that was propped up by artificially low interest rates, you have another thing coming. Now I'm gonna explain what I talked to this gentleman the other day. Now he is a contractor, he was a contractor before the last recession. Shared obviously the standard stories of I got caught, I lost my tail, you know, I was invested in a bunch of properties, and he didn't see it back then. Ironically, he doesn't see it now. People think for some reason because they went through it last time that they can identify it the next time. The problem is if you were not an investor back then, you didn't look at things the way you should be looking at it. Investors are looking at all kinds of different metrics, whereas speculators are just looking at one metric. How much money am I making? And how fast is it? Well, I guess that's 2 things. They don't see the changing tides. Investors are very cautious with putting out their money. They want to know, you know, how soon can I get my initial money back? And then how much am I going to make after that, right? In reoccurring cash flow. So he said last time was different because there was a housing shortage, and I tried to explain to him, but I couldn't get through to him. See, I said, you know, there was actually a housing, or I said, this time there's a housing shortage. This time there's a housing shortage. And I said, the problem is last time in 2006 and 2005, there was a housing shortage. Why? Because interest rates were artificially low because the Federal Reserve slammed them down in 2002, 2003 because of the dot-com bust, right? Now, what happened back then was people that couldn't afford a house because they were renting went, oh man, I could afford a house because it's now only a few $100s more than paying rent, so now I can afford. So they raced into the housing market, just like they did in 2020. Interest rates came catapulting down, just starts slamming down. As a matter of fact, even lower than they did during the Great Recession because of the pandemic and the shutdown, right? And once again, people said, I can now afford a house, I'm going for it, I'm diving in, okay? So now here's the problem with that. Once somebody makes a decision, I'm buying a house, they went out and got a real estate agent, they went and talked to a mortgage company, they now get fixed. This is what we're doing, right? And as more and more people dove in and we started seeing bidding wars, what happens is now they're stuck. They haven't seen the change, like, oh, interest rates are starting to go up, housing prices are really starting to go up, my payments going from $300 above rent to now $500 or $600 above rent. They are fixated. That's it. They're buying a house. They've got it in their mind. They're not going to fail, right? So they start bidding up these homes. And that's exactly what we saw, coupled with a historic migration from California and New York into the rest of the country, all right? That has never happened as well. As a matter of fact, the last time we've seen a migration, I think, on this level was akin to like what happened with the gold rush. People rushing into California for gold, now they're rushing out because everyone's crazy. I digress, sorry, but no, that's not true. I live in California, not everyone's crazy. As a matter of fact, most of my subscribers, Ninja Nation, are actually in California. Trust me, there are more people in California with a good head on their shoulders than the nutballs. But the problem is, the nutballs are always the ones yelling and screaming. Can't make this stuff up, guys. Point being is this. To say that this time is different is absolutely correct. This time is different and it's much worse, which means on the flip side, there's more opportunities. And that's what I want you guys to understand. So I'm going to link this story below. Take a look at it. But yes, Robert Shiller calling the 2008 bubble, talking about irrational exuberance. I still can't think about his name. Put in the below the Federal Reserve Chairman. It's not Ben Bernanke, it's the guy right before him. Alan Greenspan. Holy cow. So this is it, guys. It is different. This time is different. And it means not only is it going to be worse, it's going to be more opportunities. All right, guys, that being said, I thank you so much for watching. The Economic Ninja is out.